Hey traders, Nick Shaheen looking at two earnings in one today, Google and Microsoft. So we'll start with Google, Alphabet, I should say. I tracked the Google, not the Goog. Don't ask me why. I was long one. I was long one years ago, and they had some sort of a split on the Goog. So I was like, I don't need that wrinkle in my life, so I'll stick with the Google. So I'm not long, I'm not short, I don't have a trade in it, so this is completely agnostic. And here's the short story on Google. If you're not long, you missed it. Plain simple. In fact, you missed it here, let alone up here. They crushed it. The earnings growth was unbelievable. The sales growth was unbelievable relative to last year. Also, the beat the forecast, which I don't care about because those forecasts are, who knows what there are. They're to publish their papers, these experts on Wall Street. So it wasn't an obvious point of entry. It wasn't a short either, right? But it's just too late for me. It has to rally without me, and that's totally fine. There are dozens of other quality mega cap companies that will dip, and I will rather chase those. Okay, moving on. What did I say? Oh, Microsoft. So here's Microsoft. If you chased it into the earnings up here, you made a mistake because maybe you think you didn't because you thought that they were going to beat the earnings. Well, guess what? They crushed the earnings estimates. They crushed last year's numbers, but they're down. What is it? Down 2, 3, 4%, I think, after hours. They're at that blue line right now, but they were a little bit lower earlier. So what happened? So let me put this point to rest. I started helping people like this in 2012, and the question I get every week from hundreds of people, not an exaggeration, every week I get the same question. What do you think going into the earnings? I think what I always think. It's a complete coin flip. You're chuckling. You don't believe it. Let me prove it to you, okay? All right, so this is Microsoft. Think back a year. Just a year. We can go 10 years and it'll be the same answer. Think back a year. Have they had a terrible report? A bad report? No. Have they had even a marginally bad report? No. None that I can remember. Every report has been beat, and maybe raise. So why is it that there's only one pop and 3 drops in the last 4 reports? Shouldn't they be pop, 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 pop? If the relationship between reaction and results, there is a relationship. There isn't. It's completely arbitrary because of the expectations. What do people expect? How many expect this? How many expect that? No one can forecast this. The CEO can guess. So, in this case, they're down for whatever reason. Is it a catch the falling knife with both hands? No, because it's still too high. It was too high up here. I like dips like these. Those are catchable. Dips like these are blind catches. Why are they blind catches? Because the environment that we're in. We have Biden spending money like we're richer than whatever. We don't have that kind of cash, but hey, we're spending trillions. I think 1.9 trillion already committed and spent half or whatever, and also there's talk of another 2 point change trillion to fiscal spending, like other stuff. So, and then we have the 1.44 trillion from the Fed, which comes in the form of 120 billion a month. Like, we're not that rich, people, but there we are. We're burying ourselves in debt in order to get out of trouble. So, just to put things in perspective, how much money is floating around right now? That's why you can't short the markets, really. Compare it to the 2008 financial global debacle. So that's where all banks were in deep trouble all over the world, and that's what makes the world tick, banks. It took 470 billion back then to fix the whole problem in the US. All of it. And they made money on that money. So this is an experiment. But you can't short it. There's just too much money floating around. It's going to have to hit the companies somewhere. Ask your friends and family and check out what your neighbors are doing. People are putting pools, people are buying bikes and dirt bikes and ATVs and trailers and upgrading cars. My son sold his 2004 Silverado with 310,000, 330,000 miles for $8,500. And it was a two-wheel drive, long bed, extended. So if you know anything about truck, that's the truck you don't want because it's super long, and it's not a work truck because it doesn't have a lot of muscle, gas powered. So it's just insanity. You can't short it. Is this an entry, blind entry? No, but it's a better than here. So I question the NASDAQ that cannot rally on great news. So after hours, the NASDAQ is flattish red with these great results. Pinterest, I believe, I did a video on Pinterest, you can go check it out, is also red. That's a better buy the dip opportunity. Go check out that video. Anyway, so we have good news. We should rally on good news. If we don't rally on good news, then maybe a little breather is in the cards. I do have bearish bets on the market, but I also have a lot of longs, so I'm balanced. I'm okay with a few red days because I'm ready for that, and I'm really okay if we take off. Nick signing out. Oh, there's a link to the chat room down below. Check it out. It's free to try it out. Sorry if I said this already in the beginning. I can't remember. The link will take you to PayPal, which is $0. You have 10 days to cancel before it turns into any charge at all.